What's up, weirdos? What's going on, guys? All right. So, PPI comes in very, very nicely, guys. Very nicely. Pumps the market. But there is still an air of caution as CPI comes in tomorrow. What is that going to read? If that reads as well as today's is, that inflation is down lower than expectations or meets expectations, I would expect another big pump out of the crypto market, probably bigger than today's, to be honest with you. So yeah, here's the thing, guys. If we close this daily candle up above the 30-day, up above where we are right now, we don't necessarily have to get above and close above 114,000 today, okay? Rejecting off there right now is okay. What matters is us closing this candle up here, because we will be putting in a higher high than over here, right? We'll be putting in a higher high than this, okay? And that's the goal. That's what we want to be doing. We want to put in a higher high than this one, right? So that's what we're watching for here, guys. Can we close above it? Because if we do, guess what we are now doing? We are starting a brand new, fresh uptrend as opposed to the continuation of the downtrend, right? We are putting in, as you can see, un momento, por favor. We are putting in higher lows and higher highs, right? We are now in an uptrend if we close up where we are now. So that breaks the downward structure, sets a new upward structure in place, and everything looks fantastic. Now, don't be shocked. I mean, well, listen, if CPI wasn't coming out tomorrow, what I would say is that we'll probably come back down and test this as support at 112,500. But since CPI is coming out tomorrow, and if it is bullish, expect to break well above this $114,000 level, probably up into this golden pocket finally between around 116,000, filling that CME gap that we have there, by the way, and possibly breaking out to the upside above it, right? $117,000 would not surprise me tomorrow if CPI comes in as well as PPI. So let's actually move this box up, right, to our target. Let's move it up to our target here. There. I wouldn't be shocked to see us up inside of here. Probably going to meet some resistance at 117. As you can see, we do have significance here on this level. So, yeah, that's what I would be expecting tomorrow if we get a good CPI reading, right? Because the markets are going to start to price in the potential of either a 50 basis point cut in this month, right, or a 25 to 50 basis point cut in October following the 25 basis point cut this month, right? Expectations are going to rise for multiple rate cuts. You combine the CPI and PPI telling us that inflation's going down. You combine that with the jobs numbers, and you have a perfect storm for rate cuts galore, okay? So that's what I'm watching for, guys. I'm going to do some buying today because you might not get another chance at these levels, right? So I'm going to deploy some capital today. Candyman dropping the very first super chat of the stream. My dude, I think my wife has started to show the first signs of dementia. She said she can't remember what she ever saw in me. Well done, man. Well done. I like that one. I like that one. I got a cough. All right, so that is the only super chat to start the stream. So let's get into the chat a little bit. Attila the Hun, what's going on, man? Let's go. Angelo in the house. What's up, William? My dude, what's happening? King of Ohio, Jake the Snake. When Roberto Body Pillow. Yeah, the shirts, actually. Someone asked me, I think Sharon asked me about the shirts last night. So my guy talked to me the day before yesterday, He finally got the presses in for the shirt design. So he's literally working right now making the shirts. So the shirts will start to come out soon as I get them. So Rule Black's new video on Zebek and Azure is super interesting. Just started listening, combining instant payroll and self-service HR. Absolutely, man. Absolutely. Blessings, John. Super fantastic. John says, smash the like button. Yes, guys, absolutely. Listen, 163 people watching, and we have 53 likes, guys. Let's get those likes up to 100. Let's get to 100 here, okay? Nose is itchy. Only when I'm live does my nose get itchy. Look like I got a problem. Paul, what's up, buddy? Good to see you, man. Cody, what's happening? Sir Farmering, what's up, y'all? Show some love and make sure you hit the like, or else no altcoin season. Exactly, guys. Why would you want to do that? You're sacrificing altcoin season by refusing to hit the like button. Jared, what's up, buddy? Happy hump day. Scooping well like nobody's business. There you go. Cody says, smash the like button. Absolutely. Gamma Goddess, there she is. She says, let's keep the bags packed so we can get this money. Absolutely, man. Absolutely. Jesus, Swift to 80 cents. Ooh, amen to that. Amen to that. Sean, 20 cent Jasmine incoming. Let's go, baby. Quentin, what's up, my dude? Good to see you, buddy. Kizza's in the house. I know we're still early in September, but you reckon that was our dump in August. BTC has been, you know what? Yes, I am thinking that is our local bottom, Kizza. I do think so. I mean, I think this is where we really we see Zebek to $1.10, right? Yeah, I do think that's the local bottom, though. I thought there was a possibility we could come back down and do a little bit of a double bottom before taking off, but it looks like that's not going to happen with PPI coming in good, potentially CPI coming in good tomorrow. I don't even see us coming back down to 108,000 if that's the case. If CPI comes in bad tomorrow, then we might double bottom, but yeah. I know so many people were calling for like $98,000 Bitcoin and lower, right? Crazy numbers, man. Crazy numbers. Mirdid, Candyman's jokes of the day. I know, he just re-rocks it, eh? It's always hilarious. Yeah, boy. Where have you been, my guy? Good to see you, brother. Much love, Future and Weirdos. Good to see you back, buddy. Good to see you back. We missed you. We haven't seen you in quite some time, my guy. Okay, where were we here in the chat? Zebek for the win. Hell yeah. Danny, what's up, buddy? Good to see you, man. It's me, Yamario. Ladies and gentlemen, your crypto season in a nutshell. HODL, gain interest, and reinvest. Absolutely. Rinse and repeat. Dave, what's happening, man? What's up, man? I am Jasmine. We're all Jasmine. You know, spell token might have cured your sickness. Nice. Nice. DH, yo. What's going on? Cryptus, what's happening? There she is. Good to see you, Cryptus. JNF, will it be dumpy dump on 9/11 anniversary tomorrow? No. That has never affected the crypto markets in the past, so I don't see why it would tomorrow. Amazing Coins, what's happening, man? Hey, Rob, and all of your crypto weirdos, how's everybody doing? Strawberry Dragon in the house, what's going on? Who let the dogs out? Ready to go, brother? Absolutely, Meredith. Good to see you, brother. Miller Mountain, this live stream time slot works great for me. Sure to be in attendance. There you go. That's what I like to hear. Go fast. What's up, man? Keep them coming, Candyman. Yes, absolutely. Marcus, yo, what's up, man? Thanks for all you do. I'm digging the new time format. Thank you. Hey, no problem, man. No problem. Crypto J505, we got Gengar in the house. We got 2 Pokemon to start the day. That's what you want to see, guys. Lewis, what website do you use for altcoin season index? Rob, God bless you. If you're not in the Patreon, join now. You won't regret it. For the altcoin season index, usually I go to blockchaincenter.net. I have that saved on my favorites. So yeah. Ray, what's up, buddy? Good to see you, man. Help Rob in this channel by hitting the likes. Let's get this money. Absolutely, brother. Beebs, my dude. What's up, man? So, Beebs, I will be in Florida in January, or sorry, February. February? Yes, February. I'm going to come, no, January. January or February. I'm going to come down there. I'm going to watch some hockey. I'm going to do a little bit of a tour with a friend of mine. He runs the American Wrestling Federation. So I'm going to go down there. He wants me to do a couple shows. I'll be at his shows anyway. I don't know if I'm going to do them or not, but I'll be there. And we're going to talk some business because I'm looking at opening a business down in Florida. And yeah, I'm going to take in some NHL. So I will be down there in Florida in January and or February. K-Rock, what's up, man? Do you think Swift consolidates around 4 to 5 cents or flies past that when the time comes? It depends on when it comes. It could consolidate there, but here's the thing, guys. When altcoin season hits, there's not going to be long periods of consolidation. It's not like the middle part of the market where things work their way up and then they consolidate and then they pump again. It doesn't happen like that in an altcoin season because there's no time. It's just straight up and to the right. You have minor consolidation levels, or periods like a day, 2 days, maybe. That is it, right? So yeah. Zebek to the moon, absolutely. I only know how to buy. I can't even spell sales. Patience, absolutely, Scotty. Kiza, I'm sad you're not doing the morning stream, Rob. You're so selfish. Do you see September 17th being bullish after today's news? Well, I think that if tomorrow pumps the markets as well, I think what you're going to see is, it's really tough, right? Because normally, if we got a rate cut and then a pause in October, then I would say we'll probably have a dump after the cut, a little bit of a sell the news event. Not a massive dump, but a sell the news event, right? However, if CPI comes in good and we pump into the FOMC and Powell's speech, we get the rate cut, 25, right? And Powell basically implies we're going to see multiple rate cuts before the end of the year to continue, or we're going to see one in October, whatever the case. But if he implies we're going to see more rate cuts this year, instead of having that sell the news event, I think the market's going to start to price in another rate cut or multiple rate cuts, right? So we could pump instead of having a sell the news event. So it really depends on what Powell has to say at the end of the day. Mad Adam, Rob, firing up the crystal ball. Let's go. Mad B-Day on the 21st. Earth, Wind, and Fire crypto pump. Let's go. Beebs, Rob, I'm starting to think Powell may cut by 50 just because of how behind. Yeah, well, here's the thing, right? He has an excuse to now because with the jobs numbers being revised as dramatically as they have, that gives him cover to say, to not look foolish. He can save face and say, it's not my fault that we're behind because the numbers told us something different, right? So it does give Powell the excuse to save face and cut 50 basis points or more. You're absolutely right. Carlos, let's go. Swift to 30 cents soon, baby. Rob, what do you think? Hey, I'll take that. I'll buy that for $1, man. Stephen Mack, Kings hockey. Stephen Mack says, "Go Kings, go! Leafs are going down. Challenge accepted." Alberto dropping that cheddar. Thank you so much, brother. I appreciate you, man. I appreciate you. Shannon, what's up, man? Let's go. Thanks for everything. Well, hey, no problem, brother. No problem. I just love being here, man. I just love being here. Candyman says, with his history, I don't see Powell say anything favorable, even if he thinks another rate cut will be coming. You could be right. You could be right. However, I would argue that he did say something favorable at Jackson Hole, right? So, yeah. So you never know. You never know. All right, we are caught up in the chat, guys. Let's dive into the news. Let's see what's going on out there in the world of crypto. All right, so quick shout out to the channel sponsor. As always, guys, Decent Biometric Wallets. Not your keys, not your coins. Keep your crypto safe. Keep it off exchanges. Use our link down below. Get a 2-for-1 deal, guys. You can stake your crypto and gain APY on your decent wallet. You can swap and take profits and everything else all the live long day. All right. What else do we have? Let's dive right into the news. Candyman, I'm a liar. Nice. Carlos, Rob, alt season is closer than ever, my brother. We're almost there. Absolutely. Congratulations to everybody who held strong, didn't whine, didn't complain, didn't cry, didn't get angry and piss and moan and be toxic. Congratulations to all of you strong personalities out there. And for all of you paper hands, you weak personalities who cried and moaned and pissed and all that other stuff, and we're toxic, learn from it, right? Alt season signals, random pump hits, hints at what's coming. The crypto markets are buzzing as smaller altcoins begin to show explosive gains, some even rising by 150 to 200%. In just a matter of days, historically, this pattern has been an early sign of a broader altcoin season. A phase when capital rotates from major cryptocurrencies like Bitcoin and Ethereum into smaller, riskier tokens. While Bitcoin and Ethereum often lead the market during the early stages of the bull run, seasoned traders know the true momentum builds when gains are spread to mid and low cap assets. And that's exactly what's happening right now. Altcoin season doesn't start. Altcoin seasons don't start with every coin pumping at once. Instead, they begin with random and isolated rallies to obscure and lower ranked altcoins. These early surges are signs that capital is beginning to rotate downward from the market leaders. The process generally follows a pattern. Liquidity begins with BTC and Ethereum as they dominate market attention. Mid-cap altcoins start to gain traction. Next, low cap and speculative tokens see the final wave of inflows, often with the most dramatic gains. Currently, the market is showing those first sharp jumps, often in projects that haven't been in the spotlight for months. These are classic indicators of early altcoin rotations. For investors and traders, these sudden moves are worth watching. They often signal increased risk appetite among market participants. When money starts to flow into speculative assets, it means confidence is returning to the broader market. If history repeats, we could see a full-blown altcoin season take shape over the coming weeks. However, timing the cycle is tricky, so staying alert and watching volume and volatility can help navigate these high opportunity phases of the crypto market. Be careful out there, guys, right? Don't get stuck in some heavy leverage trade and then you get wrecked because the market goes parabolic and you're trying to short everything. Not the best idea in the world. Leafs are playing in Tampa in February 23rd. I'm there. I am there. I'm going to buy my tickets probably today or tomorrow. Ray, 5 more likes to get to 100. Let's hit the likes. J Money, third Pokemon of the day. Bulbasaur, yes, you are the third today, brother. Yeah, what do we have? We got 210 people watching. We got 101 likes. Let's start working our way up to that 150 like level, guys. We can do it. Let's get it. Let's do it. By the way, guys, real quick before I get into this next video, all I have seen over on the trading chat today in our trading group is screenshots of just screenshot after screenshot after screenshot of people in the profit on our trades. I just announced a new trade today, this morning. I uploaded a new trade video for the trading group. So guys, I'm telling you, get over there. It's just, like I said, screenshot after screenshot after screenshot of people taking their profits. 100% here, 200% there. You're missing out, man. All right, Pomp says, will Bitcoin go up if the Fed cuts interest rates? The answer may surprise you.
The Fed's going to cut interest rates in September, and Bitcoin's going to go flying to the moon, right? Well, at least that's what everyone on the internet is saying. But history tells a much, much more complicated story. Binance Research just published a new study that shows that the Federal Reserve's rate-cutting actions are not by themselves a reliable standalone indicator for Bitcoin's price movements. It's pretty shocking, and so it's worth paying attention to. Remember, data doesn't care about your feelings or your opinions. The numbers simply are what they are. And Binance Research, they went deep into the data. Pay attention to this. They show that since Bitcoin entered the mainstream in 2014, the United States has experienced 3 different major rate cut cycles. Now, Binance only paid attention to rate cut cycles in 2019 and 2024 because the 2020 rate cuts, they were driven by a one-off global pandemic. So what happened in 2019 when interest rates were cut? Well, Bitcoin displayed a classic buy the rumor, sell the news pattern. A little surprising here. In the months leading up to the rate cut, Bitcoin's price surged from approximately $4,000 to $13,000. However, once the cuts were actually implemented, the price declined. It's not what people expected. 2024's interest rate cut was a little less clear. The significant price increase of Bitcoin following that rate cut coincided very closely with shifts in the US election landscape. So it makes it very difficult to solely attribute the price movement to the rate cut itself. So 2019, we saw Bitcoin go down in price after a rate cut, and 2024 brought more questions. It was a little bit more difficult picture of what actually drove Bitcoin's price higher. Binance Research then said, okay, well, let's conduct 2 quantitative analyses. Both of these should indicate a lack of stable and significant correlation between interest rates and Bitcoin's price. The first compared the year-over-year change in the US federal funds rate with the year-over-year change in Bitcoin's price. This analysis revealed no obvious negative correlation. You would expect a negative correlation if that's what was driving Bitcoin's price. The second analysis used interest rates futures market data to measure market expectations for future rate changes and then analyze their 6-month correlation with Bitcoin's price. Math nerd stuff here. Again, the results show an extremely unstable relationship between these two, and it indicates that market expectations for rate changes can explain almost zero of the linear volatility in Bitcoin's price. The nerds agree. So if interest rates aren't driving Bitcoin's price, what exactly is? Well, Binance Research shows that liquidity is the key to everything. They write that historical data from a key indicator, the Chicago Fed National Financial Conditions Index, it shows a relatively clear negative correlation between the index's tightness and Bitcoin price volatility. The index, which has recently shown an upward turn, warrants market vigilance now. So while everyone is expecting an interest rate cut in September, don't hold your breath for it to be the reason Bitcoin goes up in price. I'm a Bitcoiner. I think Bitcoin's going higher, but after this Binance Research data, I'm going to be watching all of this much, much more closely.
It's got a point, guys. It's got a point. Market doesn't always do what everyone is expecting it to do. Got to remember that. All right, so here is the PPI stuff from this morning. So this was really good, guys. US PPI came in at 2.6%, lower than the 3.3 expectation. That is a big drop, guys. Core PPI is at 2.8 versus the expected 3.5. That is a really good indicator, man. I really hope that CPI tomorrow comes in just as good. All right, let's get into this, segue into this next article as a result of that. We're covering the chat here real quick. Candyman says, Beebs, come on. There's only 22 days in February. Sitting here listening and buying Toshi. Nice. Jared says, I'm upgrading today. You think I'll be able to get into that swing? Yeah, I do. Rodney, hope you're having a great day. Thanks, buddy. OG says, join the Patreon. You think you know, but you don't. Rob is the man with the plan. Copy and paste. Absolutely, man. Trump will give a wink and a nod at Jerome tomorrow. There you go, man. There you go. All right, what do we got? Trump scores the second win over the Fed in 2 days as U.S. PPI falls by 0.1%. Trump just got another win against the Federal Reserve after new data from the Bureau of Labor Statistics on Wednesday showed the wholesale price fell by 0.1% in August. That unexpected drop gave markets a jolt and made an interest rate cut more likely. It followed. How is it more likely? There was like a 100% chance of a rate cut. How do you get more likely than a 100% chance? Anyway, it followed a revised 0.7% rise in July and was well below the 0.3% increase Wall Street expected. The headline producer price index is now up 2.6% over the past year. The core PPI, which cuts out energy and food, also slipped by 0.1%, even though economists had forecast another 0.3% gain. Wow, so that's a 0.4% differential. When food and energy and trade are all removed, the number shows 0.3% monthly increase and a 2.8% year-over-year gain. That's the kind of number that gives the Fed room to cut, especially after months of tough talk on inflation. Ghetto Born. Rob, less crypto videos, more game commentary. Let's play Elden Ring. I will be playing streaming on my Warcraft channel today, I promise. Stock futures jumped and treasury yields dipped after the data dropped. Traders reacted fast. According to the CME FedWatch tool, there's now a 100% chance of a federal open market committee will cut rates next week. The last interest rate cut happened in December, right after Trump won the election. And while most expect the quarter point cut, the odds of a bigger half-point cut surged to 11.3% after the report. The Fed's meeting is next week, and it's not just a rate call. It'll include a full update on how officials see the economy. But the new data is turning the heat up. Services costs and key parts of inflation that the Fed watches closely fell 0.2%, led by a 1.7% drop in trade services. Wholesale margins and machinery and vehicles plunged 3.9%. That matters. That's pricing power fading in real time. Meanwhile, goods prices barely moved, rising just 0.1% overall. Core goods were up 0.3%. Food costs crept up 0.1%, while energy fell 0.4%. It's flat out there. Net, the inflation shock that was not is rocketing markets higher. Okay. Economist said Chris Rupke, economist at FWD Bonds, adding, quote, "There is almost nothing to stop an interest rate cut from coming now." The Fed has been dragging its feet all year, blaming Trump's tariffs for possible inflation threats, but the data says something else. Tobacco prices, which are affected by tariffs, jumped 2.3% in August, but that was one of the few exceptions. Portfolio management fees, a driver of July's spike, rose again by 2% in August, though down from 5.8% in July. Still, Trump has kept hammering the Fed. He's pushing for lower rates, arguing that his tariffs aren't inflationary and that the U.S. needs cheaper borrowing to grow and manage its massive debt. After Wednesday's release, he posted on True Social, "Just out, no inflation. Too late, must lower the rate. Big. Right now, Powell is a total disaster who doesn't have a clue." President Donald J. Trump. Meanwhile, the Fed's labor data headache is growing. A September BLS report from Tuesday revealed the economy added 1 million fewer jobs than earlier reported. So we talked about that yesterday. That's a total from the last two reports, I think it was, from two revisions from Biden's tenure, which revised, almost 2 million fewer jobs than was being reported. That is insane, guys. So 2 reasons why we're probably going to see beastly size rate cuts moving forward, guys. Here we go, baby. Here we go. All right, Bitcoin price cycles getting longer as new forecast says 124K is not the top. Bitcoin is unlikely to run out of fuel for new all-time highs, says new analysts. As price breaks through key resistance. In his latest market coverage, popular trader and analyst Rect Capital hinted at BTC price discovery should return. Bitcoin's return above $114,000 on Wednesday, thanks to the US macroeconomic tailwinds, but there are more reasons for bulls to celebrate. Updating X followers on BTC price action, Rec Capital stressed that Bitcoin USD had not only broken its local uptrend, but was also tackling an important resistance zone at 113K. Each rejection from $113,000 has yielded shallower and shallower pullbacks, he commented. So as we can see, every time we reject off this red line, pullbacks are shallower and shallower. So it's getting weaker. It's getting weaker. Bitcoin ended several weeks of downward price action on September 2nd with a daily candle close above the corresponding trend line, a day after seeing its lowest levels in nearly 2 months, despite the bearish predictions that accompanied the trip below 108K. Rec Capital sees the bull market as far from over. Quote, it's unlikely Bitcoin has already peaked in its bull market because that would effectively mean that this cycle was one of the shortest of all time. Popular commentator, the King Fisher, noted that the majority of liquidity was now immediately above spot price, creating short-term magnets. Could she see a bit of a short squeeze take place here? Keith Allen, co-founder of Trading Source Material Indicators, meanwhile, saw bull's next hurdle at the 50-day simple moving average at $114,700. Expecting resistance around the 50-day SMA, which is close to the psychological $115,000 level. Material indicators argued that the entire move developed with some degree of predictability based on dynamic liquidity placements and whales classic order flows. So all signs point to we have another leg up in the works, guys. Strap in and strap on. Well to the moon, absolutely, man. Let's segue over to Squawk Box. Ditto, what's happening, man? Salama. So how high can Jasmine go? 25 cents. What is your Warcraft channel? I'll pull it up for you guys. I'll pull my Warcraft channel up for you. Yeah, I live stream Warcraft. I play Warcraft and I live stream it as well. During the Biden eggs were close to $24 for 16. Now they're $6. Wow, that is a crazy drop, man. Are you serious? $24 to $6? All right, this is my Warcraft channel. If you guys want to subscribe over there, I live stream there while I play. I just kind of chill. I answer questions, whether they're crypto questions or otherwise. You can follow me there as well. I'm there usually try to be there every day. So that's my channel anyways. Check it out. Warcraft questing. All right, let's segue back over to Squawk Box. I live in Cali during the, okay, nice. Moon well to the moon, absolutely. Okay, let's check it out, guys. Wells Fargo CEO Charles Scharf. There's a big dichotomy between higher and lower income consumers.
Look at the economy, the consumer, the Fed, and so much more. We can go a million places this morning. Joining us in an exclusive interview is Wells Fargo CEO Charlie Scharf, and we're thrilled to have you at the table on this 30th anniversary week of Squawk Box, no less.
Great to be here, and congratulations to you. 30 years of anything's an accomplishment these days.
Thank you. So the big question is the state of the economy. Yeah. Your colleague, former colleague, Jamie Dimon, says the economy is weakening. Do you believe the economy is weakening?
You know, first, I think it's complicated, and I think sound bites are awfully difficult to take out of context. And I put it into two categories. Number one is what we see in our own data. The second is what you see more broadly. In our own data, things are remarkably stable. I mean, we look at, I know you guys have talked about it this morning and other times, consumer spend continues at the same year-over-year pace across almost all wealth levels. Consumer credit is as good as it's been in the last 6 months. In fact, it's probably trending a touch better. Companies are in really great shape. we look at signs for any kind of change, and you just don't see it. Having said that, there is this big dichotomy between higher income and lower income consumers, which continues and is a real issue. And when you look at just the overall data in terms of jobs, it's undeniable in terms of just job creation. So yeah, things are actually feel very good today, certainly relative to what you think they could be. But it's not equal across wealth spectrums. And there's probably more downside than upside.
So the high-end, low-end consumer spending, you see it, but it's the same as it was a year. It hasn't gotten any worse.
Yeah,
is that
it's interesting what we see is we see fairly consistent spending levels across low end and high end, except the low end is spending the money that they have. So their balances are below where they were pre-pandemic levels. But they are living on the edge. Hasn't impacted credit yet, but they're certainly not becoming more healthy, and the affluent customers are bringing up the averages.
Here's the weird thing. If consumers are still spending and businesses are still printing record earnings, stock markets at new highs, you would think businesses would be more inclined to hire people.
Right.
Why do you have the jobs picture looking as weak as it is when businesses, you would think, would be feeling pretty good about things?
Yeah. Well, listen, it's hard to exactly know. What I would say, we spend a lot of time talking to our middle market customers across the country. And I think certainly tariffs do have an impact on it, which is that, well, back up. It's actually very interesting. When you go around the country and you talk to middle market customers, doesn't matter whether you're in a red state or a blue state, what you hear is more business owners and people leading these mid-sized businesses happy that this country is dealing with the trade inequities that have existed. So they feel good about that. They're willing to deal with the uncertainty, but they need to react to that. And so part of that is just being very prudent in how they're hiring. And so, that certainly seems to, be dampening, the increase in jobs. And then beyond that, there's the whole AI revolution. I personally think we're still so early in the impact of AI that it's hard to actually believe that that's the meaningful driver today.
Right. When you've thought about job count, employment, have you gotten to a point where you said the AI is so good that we can actually scale back in terms of new hires, for example? Are you there yet?
We're just starting to get there. I mean, you're starting to see it in those places where it's easiest and most obvious.
It's a little early
within
for
technology
AI to be
in terms of coding. I mean, the efficiencies you can get by using the tools today are significant, and you can either get a lot more productivity and have the same number of people, or you can deal with less people. We're growing our tech budget, so for us, it's less about having reduced headcount and technology, and more about just being able to get more done.
In terms of the credit score, if you will, of America, when you look at just how people are either taking on debt or not, in regards not just to mortgages, I'm talking about credit cards and the like, how much of that is a feature of what's happening in our economy?
Well, it looks like when you look at what's happened in the credit spectrum, that the financial institutions have been fairly prudent about not allowing people to overextend. So when you look at our credit card growth, we've grown substantially over the last 4 or 5 years with new products and whatnot, gone from 35 billion to 50 billion receivables. That number has actually kind of leveled out over the last couple of quarters, partially because we've tried to be very prudent about who we extend credit to, but also because payment rates are very high. So, certainly the credit segment where we participate, I think, financial institutions have been quite constructive.
So you don't believe that people are sort of overextended in some other way that we don't know about? You've read, over the summer, there were a bunch of these articles about how maybe parts of the country were
you just don't see it in the
living
results.
Beyond their means.
You just don't see it. Again, when we look at, early stage delinquencies across all the different folks that we lend to, it looks good.
By the way, as a bank, how do we have this Klarna IPO coming up? Mm-hmm. How do you think about the sort of buy now, pay later, and all of the sort of fintech companies that have come on that effectively are trying to compete away some of the more classic legacy businesses?
Yeah, listen, it's competition. It's competition in lending. There's competition in the deposit space. our view in terms of what we do and the benefits that we bring is it's a broad relationship. So it's not just about the credit card loan. It's not just about the mortgage. It's about all the things that we do. And I think that's, one of the huge benefits that a substantial institution like ours brings is we can provide a broad set of advice and help you both on the deposit side, the loan side, investments, and all the other things that you need.
The people who are naysayers and concerned about some of those fintech companies would say, hey, they don't know how to price loans appropriately. Do you share those concerns, or do you think
listen, I would say the following. I think when you look at consumer markets and when you look at wholesale markets, there's a huge amount of liquidity available for loans, right? And whether it's in the public space, the private space, not everyone has been through a cycle. And I just think that, yes, some people understand it better than others. I don't know who really understands and who doesn't, but there will be casualties for sure.
When there's a
cycle, which there will be a cycle. Pretending that there won't be a cycle is just crazy.
Yeah, man. Yeah, AI taking jobs, eh? Interesting. I would think it's a little early for them to be taking jobs en masse, but I'm seeing comments here. Somebody lost a job. I'll get to that. Ditto, Rob, thoughts on staking Ethereum on exchanges versus a hot wallet? Honestly, Ditto, I would probably stake it on my cold wallet, on my self-custody wallet, over an exchange or a hot wallet, because at least then it stays in your custody, right? That's what I would probably do. Tyler, AI has an impact. Yes, well, yeah, I'm getting that now. What time frame do you see 20 to 25 cent Jasmine? Well, if Bitcoin tops sometime in November, December, then you're probably looking at altcoins topping next year, January, February. So probably next year, yeah. Ain't no jobs, folks. Yeah, no kidding, eh? Many ways to survive and thrive. How do I get to see all of your information? I only see what I have on my phone. I don't understand what you're asking me, James. Are you asking about the Patreon? Like, I don't understand. My brother just lost his job 2 weeks ago to AI. He was a dispatcher for a trucking company. Ah, damn. Sorry to hear that, man. Sorry to hear that. Migration has an effect on jobs as well. Yep, very true. Just had a 2-hour meeting over AI integration into the company. Too bad AI can't do my push-ups. Yes, easy. 50 push-ups. Father Rob, Patreon saint of crypto. Let's go Swift. Hey, let's go Swift. Absolutely, man. Absolutely. Carlos, Swift is my biggest conviction. Thanks, Rob. I follow what he does. There you go, man. There you go. All right, crypto exchanges continue aggressive altcoin listings, guys. This is only going to get more and more aggressive. Cryptocurrency exchanges maintain optimism as the last quarter, continuing their listing activity despite the sluggish September announcements are flowing at full speed. And the number of alternatives is rapidly increasing. Naturally, this means that while some new players enter our lives, others will disappear in a fiercely competitive environment. So we're seeing a lot of exchanges. I'm not going to cover the projects they're listing, KMNO, NO, and Dolo, because I don't know what they are, so I don't want to promote them. But the point is, exchanges are starting to ramp up listings, guys. You're going to start to see your ZBEX, your Onyx coins, your Swift coins, and stuff like that start to get listed everywhere, right? Thanks, Rob. Do you think it's worth holding Solana long term? I wouldn't say. I don't know if it can reach, like, in terms of prices. I don't know if it can reach Ethereum's level. Yeah, probably where Ethereum is now, I could see it. Yeah, Solana is worth holding long term, I do believe. AF, what's going on? Thanks for all your help. Hey, no problem, man. Jasmine's my biggest bag. Let's go. Nice. I was listening to Mark Benefoff, CEO of Salesforce. They said they're laying off 4,000 employees because with AI, they don't need that many heads. Oh, horrible, guys. That's absolutely horrible. Right? You hate to see that. You do. Okay, so going back over to the Bitcoin chart. What's going on there? All right, so yeah, guys. Goal number one. We got to close above the 30-day SMA. It's sitting at 113,295. That's what we want to close above right now, right? Closing I mean, listen, I mean, that's like a, it's not, we don't have to. What we do have to close above no matter what is 112,536, this blue line, so that we put in a higher high and break the downward structure, right? That's what we absolutely have to do. But I want to see us close above the 30-day, because the 30-day often acts as a very, very significant level of resistance. As you can see, every time we engage with the 30-day, right, it is very, very significant, especially down here, right? We had support, we had resistance, resistance all through here. It is a significant level that you don't really want to mess with the 30-day on the daily time frame, right? You want to get above it, you want to stay above it. Every time you fall below it, it's frustrating because it can act as a very, very strong level of resistance. So that's what we want to close above today, guys. Listen, we will be going live over on the Patreon in about 20 minutes, guys. So get ready, get over there. And listen, like I said, all I'm seeing is screenshots over in our trading group, guys, of profit taking like crazy. Get over there. I just dropped a new swing trade opportunity on our trading group this morning. New video is up and posted. Check it out. I will see you guys live over on the Patreon in about 20 minutes. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.